Welcome to the Deep Dive. We're your quick route to understanding the big shifts in the business world.
And today, we're jumping into Opendoor. Big changes happening there.
Yeah, specifically their kind of aggressive refounding. We've pulled the key stuff straight from their first open house earnings stream.
Right, and we're really focusing just on the opening remarks from the new CEO, Cass Natkin. That's where the core vision is laid out.
Absolutely. Our mission here is simple. Quickly get to the heart of what's driving this Opendoor 2.0.
And it really starts right at the top with how Natkin sees himself.
He doesn't position himself as your typical CEO, does he? He calls himself a computer nerd turned lawyer turned founder.
Yeah, and he says he sees his main job as being a product manager. That tells you a lot.
He even had that analogy.
The Sonos analogy, yeah. He said he's not the guy you invite to a party for laughs.
Right. He's the one you call if you want someone to fix your Sonos.
Exactly. It's a signal, loud and clear.
Yeah.
Focus is on product, on fixing things, on execution, not just, corporate speak.
And it seems like it's not just talk. They've got some early numbers to back this up.
Oh, yeah. Almost immediately. In just the first 7 weeks with him really driving things, the number of homes they acquired, like the speed of acquisition, nearly doubled.
Doubled? From what to what?
They went from acquiring about 120 homes in the week before he really took the reins to 230 homes just 7 weeks later.
Wow. Okay, so that kind of jump, it suggests there was some serious blockage before.
Definitely. Which leads right into the CEO's own diagnosis, right? Why the need for such a drastic change? What was broken?
Okay, let's dig into that. What did Natkin say was wrong with the old Opendoor?
Well, the biggest thing, fundamentally, was like an identity crisis. He basically said they had lost faith in the power of software.
Lost faith in software for a company like Opendoor?
Sounds weird, right? But he said they stopped acting like a tech company. They became more like an asset manager trying to predict the economy.
So less about efficient processes, more about making macro bets.
Exactly. And if you're not trusting software, what do you rely on? People. Manual work.
Which connects to the next point he made, the sheer inefficiency.
Yeah, he called it AI skepticism. A real reluctance to automate what he called toilful work.
And he gave that crazy example.
Get this. Dozens of employees whose only job was copying and pasting information from PDF documents into spreadsheets.
Just manually moving data in this day and age.
Yep. Think about the cost, the potential for errors. It's mind-boggling for a company at that scale.
Okay, so internal processes were bogged down. What else?
Well, there was also this reliance on outside help for core decisions.
Consultants.
Millions of dollars. He said a major expense in the first half of the year was paying a well-known consulting firm to make basic strategic choices.
That really signals a lack of internal confidence, doesn't it? Paying others to tell you how to run your own business.
It really does. Like management wasn't willing or maybe able to make the tough calls themselves.
And the final piece of the diagnosis.
Just becoming incredibly risk-averse. Paralyzed, almost.
How so?
He pointed out that if you sort of ignore the really chaotic COVID period for comparison,
okay,
the company actually bought fewer homes in the third quarter than it had since way back in 2017.
2017, but they were tiny then.
Exactly. They were basically a startup back then. So fast forward years later, and they're buying fewer homes, and shows they just weren't willing to take on inventory risk. They were frozen.
Okay, so that's a pretty stark picture. Lost identity, manual inefficiency, dependency on consultants, and risk paralysis.
Yeah. Clearly needed a shakeup.
Which brings us to the turnaround, the founder mode philosophy. What's the core belief system of Opendoor 2.0?
It's a complete reversal. The absolute foundation is we are a software company, period.
And the leverage comes from?
Engineers writing code. That's it. That's their edge. And core to that is believing that machines are fundamentally better at pricing assets than humans.
Better than humans at pricing homes. That's a strong statement.
It is, and it directly shapes their whole operating model.
They talked about this shift using trading floor terms, right? Moving from a prop desk to a market maker. Can you break that down for us?
Sure. Think of a prop desk proprietary trading desk as trying to make big profits by betting on which way the market or home prices will go. They want big spreads, and they might hold assets longer, waiting for their bet to pay off.
Okay, so prediction focused.
Right. A market maker, on the other hand, doesn't really care about predicting the future price. They make money on the flow.
Flow?
Yeah, volume. Lots and lots of transactions. They aim for very small, tight spreads on each deal, buying and selling rapidly. Speed and volume are key.
So it's less about hitting home runs on individual flips, more about consistently hitting singles, but tons of them.
Exactly. Velocity is the name of the game, which, by the way, also tackles another big risk.
Adverse selection.
Precisely. Natkin called the old strategy slowing down, trying to buy homes way below market with a big spread, a massive red flag.
Why a red flag?
Because, think about it. If you make a really low offer on a house and the seller instantly says yes.
Uh-oh, they might know something you don't.
Exactly. That's adverse selection. The seller has an information advantage, maybe about a hidden defect. By moving fast with tight spreads, Opendoor reduces the chance that sellers are only accepting their offers because the house has problems.
Makes sense. But to make money on tiny spreads, you have to be incredibly efficient.
Non-negotiable. Operational excellence is paramount. That's where the software focus comes back in. And it extends to everything, like marketing spend.
What's the approach there?
He used another finance analogy. Manage marketing dollars like a hedge fund would manage its IRA.
Meaning?
Super disciplined. Only spend where you know you're getting great payback. No more spray and pray marketing, just hoping something sticks. Every dollar has to work hard.
So the overall business plan sounds simple.
Radically simpler.
Yeah.
Step 1, buy and sell tons of homes fast. Step 2, be ruthlessly efficient operationally using technology. Step 3, launch related services, mortgage, insurance, warranty to add value and capture more of the transaction.
Focus on the core, execute like mad.
That's the essence of it.
Okay, let's talk about that execution then. Because they didn't just talk philosophy, they started shipping stuff immediately.
Yeah, the pace of product launches seems pretty intense already.
What are some concrete examples of this AI integration and the operational changes actually happening?
Well, a big one is revamping the home inspection process. This is key to avoiding that adverse selection we talked about.
How are they doing it differently?
They're building it from scratch, focusing on structured data. Think in-app video and audio feeds during the inspection, guided prompts, all feeding directly into AI models for analysis. Then they validate it with standardized physical inspections. It's a trust but verify approach.
So better data, cleaner data, right from the start.
Exactly. High-fidelity data to make better decisions faster.
And what about the actual product features they've launched? Anything stand out?
Oh, definitely. The theme is automation, end-to-end. They've launched AI for home scoping, basically. The machine decides what repairs or renovations are needed.
Wow, okay.
They're automating chunks of title and escrow using AI, too.
Yeah.
But maybe the most headline-grabbing one is Opendoor Checkout.
Checkout, what's that?
It allows a potential buyer to tour an Opendoor home and then actually submit an offer directly through the website or app.
Without talking to a human agent.
Without talking to any human. Natkin literally called it shipping the buy now button for homes.
That's pretty radical for real estate, like buying a car online.
That's exactly the vision he painted. He compared it to buying a Tesla. You choose the home, arrange financing, maybe add a warranty, insurance, all in one smooth digital flow.
Okay, the ambition is huge. Are they seeing actual efficiency gains from this stuff yet?
Seems like it.
Yeah.
He shared some internal metrics. For instance, the underwriting process for closing a sale used to involve potentially up to 11 different Opendoor employees touching it.
11 people for one closing.
Yeah, in the hot path, as he put it. Today, that's down to just one person.
Doing what?
Basically auditing the machine's work, making sure the AI is doing its job correctly.
Yeah. That's a massive reduction in labor cost per transaction.
Huge. And speed, too. He said AI is now doing almost 750 home assessments per week, and it cut the assessment time down from nearly a full day to about 10 minutes.
10 minutes? That's incredible.
And it's not just the engineers. He mentioned a non-technical employee used a no-code tool to automate a quarterly inventory management task, cut it from 10 hours down to 7 minutes.
So the culture of automation is spreading.
That seems to be the goal. Make everyone think about efficiency.
Okay, connecting all this tech focus back to the bigger picture, Natkin laid out a specific 4-step plan and also had to deal with their financial situation, right?
Yes, the roadmap is crucial. And sorting out the balance sheet was step 0 almost.
Okay, what's step 1 on the official roadmap?
Get to break even. Specifically, adjusted net income break even on a rolling 12-month basis by the end of next year, so end of 2026.
Why is that the absolute priority?
Financial independence. He was explicit. Achieve this so the company will never be forced to raise equity ever again. Stop relying on external capital markets.
Makes sense. Control your own destiny. What's step 2?
Once they're stable, focus on driving significant positive unit economics. making good profit on each home transaction, while also cranking up the speed, the transaction velocity. And this includes really rolling out those financial services.
Okay, stability, then profitable growth. Step 3.
Shift the focus heavily towards direct-to-consumer, or DTC, dealing directly with buyers and sellers online, cutting out intermediaries where possible.
Is there evidence that works better?
Apparently, yes. He said their tests showed the DTC funnel converted 6 times better than their traditional non-DTC channels. So that's clearly where the leverage is.
6 times. Okay, that's compelling. And the final step, step 4.
Become a true platform. This is the longer-term vision. Allow buyers and sellers to transact on Opendoor, even if Opendoor isn't the one buying or selling the house.
Ah, like Amazon Marketplace. Let third parties use your system.
Exactly. It dramatically lowers their own capital risk because they don't have to own all the inventory themselves. They just facilitate the transaction.
Very interesting. Now, alongside this roadmap, they talked cost discipline. We heard about the consultants.
Yeah, the plan for spending on management and PR consultants going forward. 0. Down for millions.
That's a statement. Any other cuts?
Terminated contracts with over 20 software vendors. Just cleaning house, getting lean.
And they had that big financial overhang to deal with too, right? The ticking clock you mentioned.
Yes, the convertible notes.
Yeah.
That was serious.
Can you explain for listeners why those notes were such a risk?
Sure. Convertible notes are debt, but they can convert into company stock later. The danger here was an early repayment trigger.
Meaning?
Meaning, if certain conditions were met, maybe the stock price fell too low or some other financial metric was breached, the holders of that debt could suddenly demand immediate repayment. In cash.
Which could bankrupt the company if they didn't have the cash on hand.
Precisely. It was a major risk hanging over them, especially during a turnaround. So Natkin had to defuse that bomb.
How did he do it?
He used their existing ATM program that's at the market, lets them sell stock directly into the market as needed, raised almost $200 million quickly, gave them breathing room, and critically, they reached an agreement with the note holders to retire the majority of those risky convertible notes.
So basically bought them back or restructured them to remove that trigger.
Yeah, neutralize the immediate threat, a huge de-risking move.
Okay, one last financial piece. The dividend warrant. That's unusual. Why warrants?
It's about aligning with shareholders, especially long-term ones, and rewarding their loyalty through this tough period.
How does it work?
For every 30 shares someone holds, they get a special warrant. Actually, 3 series of them, K, A, and Z. These warrants give the holder the right to buy shares at a set price in the future.
So if the turnaround succeeds and the stock price goes up?
The warrants become valuable. Shareholders share directly in the upside that the company is trying to create. It links their reward to the company's actual performance.
Right, makes sense. A way to say, stick with us and you'll benefit.
Exactly. Rebuilding trust.
Okay, so wrapping this all up. The big picture here is Opendoor 2.0 has this seemingly simple mission. Tilt the world in favor of homeowners and those working hard to become homeowners.
Yeah, and the belief is that the way to do that is through radical transparency, aggressive execution, and fundamentally building great software.
Eliminating friction in one of the most friction-filled transactions people ever undertake.
That's the goal. Natkin sounded genuinely excited, saying he's more bullish today because he sees the changes happening inside. He promised transparency, no corpo jargon, just building out in the open.
The ambition is clearly there to do for buying a home what Amazon did for shopping.
It's a massive undertaking.
Which leaves us with a final thought for you, the listener. Given this intense focus on machine pricing, speed, AI automation, and vertical integration, think about the traditional home buying process today. All the delays, the paperwork, the uncertainty. What specific painful friction point do you think might be the first to actually disappear for the average person trying to buy or sell a home thanks to this new founder mode at Opendoor? What changes first?